Long-term disability insurance protects the most valuable financial asset of a doctor, the ability to trade time for money at a high rate for the next 30 to 40 years. While disability insurance is not cheap, it often costs 2 to 6% of the amount of income you protect. There's a reason for that. Doctors actually use their disability insurance policies. Some estimates are that as many as 1 out of 7 doctors will receive benefits from the long-term disability policy at some point during their career. In this video, I'm going to tell you 12 reasons why you should buy this policy in residency rather than later. The first is that you have an income. When you have an income, it's time to protect the income. And I don't really recommend people buy this using student loan money in med school, but once you're out of med school, you're earning money, it's time to protect it. Go ahead and buy disability insurance. Number 2, residents get disabled too. We feel invincible, we're young, we're taking care of people that are sick or injured, but you know what? It does happen to residents all the time. And it's entirely possible. If you don't buy disability insurance now, you can get disabled before you ever get out of residency, and you'll never get those big bucks that you were counting on. Number 3, the younger you are, the cheaper it is to buy a policy. It's actually cheaper to buy a policy at 30 than it is at 35. And I'm not just talking about the annual cost, I'm talking about the total overall cost. You can actually get more coverage for less money if you buy it when you're young. So buy it at a younger age, meaning when you start residency rather than when you become an attending. Number 4, a policy is never more valuable than it is when you buy it young. And the reason why is these policies only pay to age 65 or 67. And so if you get disabled at 35, that thing's going to pay out for 30 years. If you get disabled at 55, it's only going to pay out for 10 years. And so it's actually more valuable early on because you can get more money paid to you from it. So why not buy it when it's particularly valuable? It's cheaper and it's more valuable. What's not to like? Number 5, there's less chance of you having a serious medical condition when you buy this during residency than if you buy it later. And what happens with serious medical conditions and disability insurance? Well, either they won't sell you a policy or they put an exclusion on that condition, such that if you're disabled by that condition, it's not going to pay out. Number 6, during residency, you have less time and money for dangerous hobbies like scuba diving, skydiving, flying planes, or climbing. And if you haven't done these activities in the previous 6 or 12 months, like many residents have not, you actually don't have to answer that question yes of whether you do those hobbies. You can say no in good faith and good conscience, and they won't be excluded on your policy. Number 7, you actually benefit from a larger benefit to income ratio as a resident. Okay, you might only be making $60,000 a year, but you can often protect $60,000 worth of benefit. That's not the case later on. Later on, you're probably only going to be able to protect about 2/3 of your income. Number 8, you might be considered a cheaper specialty as a resident. Some specialties cost more than others to insure, but oftentimes a resident is considered a cheaper specialty than that same specialty as an attending. And so you can take advantage, again, of cheaper pricing. Number 9, residents sometimes have access to unique products that are specific to residents. And so that oftentimes gives you a better policy overall that you can still carry with you once you leave residency. Number 10, portability matters more. Sometimes when you leave residency and take a job, it's the last job you're ever going to have. And so it doesn't matter quite so much that a policy is portable, meaning you can take it with you when you go. But in residency, portability really matters. You're for sure going to leave that residency at some point and go get another job. And so having an individual disability policy that you can take with you rather than whatever they provided to you in residency matters a lot more to a resident. Number 11, when you buy a policy, you lock in your insurability, both for the amount you bought the policy for, but also for any future purchase option you buy. And that's what most residents should buy, is they should buy as much insurance as they'll sell them, plus as big of a future purchase option as they will sell them. And that might be another $2,500 or another $5,000 a year. But what you've done is you've locked in your ability to buy that insurance once you come out of residency and actually have a little bit more money. So if you pick up some dangerous hobbies, you pick up some medical conditions, you can still get more insurance as an attending if you bought it as a resident. Number 12, student loans may not go away with disability, right? Federal student loans go away with permanent disability, but private loans don't always. So you could be stuck with those if you get disabled. So it's important to buy enough disability insurance policy so you can make sure those loans go away whether you can work or not. The time to buy disability insurance is early in residency. If you're wondering if you need disability insurance as a senior resident, you're already behind the 8 ball. Even if your residency offers a policy, you probably still need a good individual one. At a minimum, meet with an experienced independent agent like those we recommend at whitecoatinvestor.com to go over the differences between your group policy and the best policies. Then you can make an informed decision.
The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.